Hello everyone and welcome to a new day of rushing, simplified news for busy investors. Made by a woman for busy investors everywhere. Clear headlines, quick context, and only what truly moves capital markets. Let's dive into the 5 stories moving the world's money. First headline: Shutdown resolved. Markets surge on policy breakthrough. What does it mean? Senate Democrats broke ranks to pass a bipartisan spending bill, officially ending the longest U.S. government shutdown in history. Markets rallied 1% as investors priced in a data rebound and renewed odds of a December rate cut. Why magnify it? This resolution unlocks delayed economic reports and restores market visibility just as the Fed prepares its next move. Expect increased volatility as traders digest real data after a month in the dark. Possible affected sectors: treasuries, banks, consumer discretionary, industrials, and rate-sensitive assets. Second headline: Gold breaks out. Analysts now see $5,000 as base case. What does it mean? Gold surged 0.7%, its biggest daily jump since May, as investors sought safety amid lingering inflation and geopolitical risk. Barron's analysts now see $5,000 per ounce as more likely than $3,000 over the next year. Why magnify it? This isn't a speculative pop, it's a shift in global reserve psychology. With central banks buying record tonnage and yields cooling, the case for gold as an inflation hedge just got stronger. Possible affected sectors: gold miners, commodities ETFs, jewelry retailers, metals refiners, and currencies like the yen and Swiss franc. Third headline: AI chip demand splits. Nvidia strong, TSMC slows. What does it mean? Nvidia is demanding more wafer capacity from TSMC, yet the Taiwanese chipmaker reported its slowest sales growth in 18 months. The divergence signals uneven AI infrastructure demand and cooling consumer hardware momentum. Why magnify it? It's a red flag for the supply chain. AI leaders are expanding aggressively, but second-tier suppliers are showing fatigue, a classic sign of cycle maturity. Possible affected sectors: semiconductors, chip equipment, cloud infrastructure, AI hardware, and Asian manufacturing. Fourth headline: Corporate earnings revised up, but guidance warns. What does it mean? S&P 500 third-quarter profit growth was revised up to 14% from 9% a month ago. A major beat. However, companies are tempering expectations for the holiday quarter as input costs and wages stay sticky. Why magnify it? The market's powered by momentum, but forward guidance matters more now than headline beats. Analysts may have to recalibrate earnings per share forecasts for Q4. Possible affected sectors: megacap tech, industrials, consumer discretionary, and financials. Fifth headline: Tariff dividend, confusion, tax cuts instead? What does it mean? Treasury officials hinted that Trump's proposed $2,000 tariff dividend might materialize as direct tax cuts instead. Meanwhile, Supreme Court tariff hearings continue, keeping policy risk in play. Why magnify it? Markets love stimulus talk, but fiscal uncertainty this late in the cycle can spark currency volatility and inflation repricing. The form, dividend or tax cut, will determine who benefits most. Possible affected sectors: retail, industrials, small-cap equities, treasury yields, and consumer spending. That was your 3 to 5 minute brief. If this helps, the best free support is to subscribe, turn on notifications, and share it with people to help them too. Links to all socials and the written brief are in the description. Thanks for listening to Rushing, your daily fastest financial source of news before the market opens.